If you're wondering what is a spread in Forex, then you're not alone. It is probably one of the first questions any trader asks when interested in trading contracts for difference. Spreads are fees which you pay to your broker to be able to buy and sell. This is how a lot of brokers make money. The size of a spread can affect your earnings significantly. To be able to plan ahead, the stability of a spread is important. This video will answer the question, what is a spread in Forex? And compare spread fee among Exness account types. Watch full video to understand the potential impact of spreads on your earnings and looks at the various types of spreads available. This is the Exness Market Channel, where we provide the most useful information about trading activities on the Exness platform. We are a leading development partner of Exness. If you're new to Exness Market, make sure to hit the subscribe button to stay updated with our latest videos. If you have any questions, feel free to leave a comment below, and our team will get back to you as soon as possible. You'll find the registration guide and the latest Exness updates in the video description and pinned comment. Besides this channel, you can also visit our Exness Market website to explore more about Exness. So what is a spread? A spread is the price difference between the buy and sell price of an instrument. It's the fee that a broker like Exness charges for providing its services to those wanting to trade Forex. Essentially, spreads are the key costs involved for covering your broker's expenses such as staff salaries, maintaining servers and platforms, and developing new services. Now you would want to know how spreads work, right? So basically, spreads work in practice by splitting the market price of an instrument into two prices in the trading platform. These two prices are called ask and bid. You buy at the ask price, which is always higher, and you close your buying trades at the bid price. When you sell, the opposite is true. You open at the bid and you close at the ask. This is why you always see a small loss as soon as you open a trade. You can also find average spreads on Exness website under the information about instruments. This page tells you how much the average spread was recently for major currency pairs. Remember that the spreads quoted on the website are not the same as the live spreads you see on a trading platform. The spreads on the site are the average of the previous day, when the market was open. Next, I will explain why spreads are important. So having a lower or tighter spread is important because it means that you can save money. If you pay less to trade, your total earnings will be higher or your total losses lower. Equally, it's important to have a consistent or stable spread because that makes it easier to plan ahead. If you have a reliable understanding of the spreads you'll need to pay, you can backtest and conduct walk-forward tests, and be more confident that the results are accurate. If you're new to trading, it's also important to have reasonably consistent and stable spreads during periods where certain news could affect the market. Given the Forex market volatility and activity in markets around the most important news like the US job report, it's impossible to have a truly fixed spread at such times. But some brokers or market makers like Exness are leaders in maintaining consistency. Now let's talk about different types of spread. Usually, traders and brokers categorize spreads based on how much they change and, to a lesser extent, how often they change. Such changes to spreads can be due to a range of different factors. But liquidity and major news are the most important. And there are two types of spread: floating and fixed. About floating spread, the large majority of spreads are floating, also known as dynamic spreads. They change depending on various factors such as the time of day, market conditions, the news, liquidity, and the order book. Floating spreads can vary dramatically from less than a pip during inactive periods when an instrument has been open for a while, to dozens of pips or more during major news or high volume periods such as opening and closing times. There are two more major types of spread in Forex trading. Moving on to fixed spread. A fixed spread is a spread which is always the same and doesn't change. Truly fixed spreads are extremely rare in retail trading, because they don't represent the real market. In any financial market, spreads must change even slightly, depending on the state of a particular broker's order book. During important news cycles, for instance, prices change very quickly due to high volume, which could cause many pending orders to trigger in quick succession. At such times, brokers need to offer a higher spread to reduce risk for both them and you, the client. Now that you understand the basic answer to what is a spread in trading, You must learn how a spread is calculated before starting to trade. Actually, you don't need to know everything or do all the calculations in your head. Exness Trading Calculator can calculate the spread and help you to work out how much spreads cost among many other things. So, to calculate the spread, you subtract the lower price from the higher price. In financial contexts like Forex, this typically refers to the bid-ask spread, where you subtract the bid price, what buyers are willing to pay, from the ask price, what sellers are asking. This difference represents the cost of trading or the profit margin for the market maker. For example, if the bid price of a currency pair is 1.1200 and the ask price is 1.1250, the spread is 50 pips. Pips are often the unit of measurement for small price changes. Moving on, we will explore spreads in different Exness accounts. Several of the accounts available at Exness have spreads as the model for pricing. Some are categorized as standard accounts and others are professional accounts. Standard and pro accounts differ mainly in execution. The standard account uses market execution exclusively, while the pro account uses instant execution for almost all instruments, except for cryptocurrencies. The pro account also offers the lowest spreads available from Exness without commissions. For the majority of traders, a pro account offers the lowest costs to trade. Spreads for pro accounts are on average higher than for zero accounts. But there are no commissions. If you want to use any time-based strategy, except scalping and focused day trading, and you're prepared to make a minimum deposit of $200, a pro account might be for you. However, if you don't want to deposit that much, you can still trade on a standard account. Let's talk a little bit about zero accounts. You know what? Exness also offers the option of a zero account, one of its professional accounts that features commissions. With a zero account generally, various instruments have no spreads. If you're a scalper or algorithmic trader, a zero account might be a good choice. You can plan very short-term and high-frequency trades with this account. That can be more effective because the commissions are fixed for all instruments. Any change to commissions is announced in advance. Please remember that zero accounts don't have zero spreads for every instrument all the time. Exness offers consistent zero spread for the top 30 instruments. In fact, some extremely rare exotics such as Australian dollar, Danish krone, and relatively less traded individual shares such as Broadcom will almost always have some spread in addition to the commission. And what about raw spread accounts? So if you want to use a variety of strategies to trade, a raw spread account might suit you. This professional account works with a combination of spreads and commissions. What is a spread in trading a currency pair with the raw spread account specifically? Spreads here are higher than the zero accounts but lower than for the standard or pro account. The commission is higher than the standard or pro account but lower than the zero account. If you compare the spread information of Exness with other brokers, you will see that Exness generally offers quite favorable spreads. In cases where news events occur, accounts with variable spreads, such as raw spread, pro, or standard accounts, will experience an increase in spread. However, the expansion is not significant and is generally acceptable with Exness. When you are trading, pay attention to how the spread for the specific product you are trading behaves when news is released, as it will vary. So that's it for today. During your research on products on the exchange as well as other operations on Exness, if you have any questions, you can leave a comment below the video, and the team will support and answer you as soon as possible. Thank you for watching the video. Don't forget to like the video. Click the subscribe button